My name is Peter Matt, the CEO at CMC, and you're watching Taking Stock.
2 minutes ago, here into the closing bell from the one, the only, the truly iconic trading floor of the New York Stock Exchange. The team from Community Financial System, ticker symbol CBU, set to do the honors in just about 90 seconds time. They will also join us on this edition of the show on this Monday, August 24th. Staples, utilities, and financials, the best performing sectors in the S&P 500 for your Monday afternoon trade, and some laggards including tech stocks, energy, and industrials. Peter Tuchman, the Einstein of Wall Street, joins us now for his take on today's tape and much more. What'd you see to kick off the week here,
Look,
Pete?
there was not a lot of imbalance right now, so not a lot of flow coming into the market. For me, it felt like there was a lot of news coming out of Iran, a lot of sort of, I don't know, it just felt uncomfortable. There's not a lot of buying positions right now, and I think the sort of uncertainty about what's happening in the Middle East, even though it's not like breaking news, I think it's sort of mulling underneath the market. You'll remember on Thursday, there was that day we were down 60 handles, and I said it's not, I can't put my finger on it, it feels like the market is under some pressure, and that's what I'm sort of feeling here. Yeah. We've been fighting the red all day long. We haven't even approached. I know the Dow is up, but we're just fighting negativity. Tech is the problem. Yep. It's the, what was it called? CapEx versus monetization.
Correct.
Once again, that's rising above.
That's a big one.
The cream, and that's causing problems.
Peter Tuchman.
NVIDIA earnings after
On
the bell.
Wednesday. Time now for the bell. There you go. Oh, these clappers are cool. Can I borrow one for a second? There we go. Together, 160 years, Community Financial System, CBU here at the NYSE. They'll join us on the broadcast in just a moment. Thank you very much. Thank you all for being here. Your final tail of the tape on this Monday, August 24th. The S&P in the red about 0.3. The Dow, to Peter Tuchman's point, in positive territory. Looks like 0.25%. The Stock Exchange Composite Index just negative 1/100%, just missing out on another all-time high gain. And the small caps, the Russell 2000 in the red, 0.8%. Let's bring in our first guest who joins us now, Jessica Inskip, the one and only Director of Investor Research at stockbrokers.com. Thank you for being here today.
Happy to be here, JD.
I brought all these cheering people for you, rightfully so.
Oh, love the clappy things.
Okay, so here's why I love talking. Because usually I love all my guests equally. We got to talk macro stuff, but with you, we get to dig right into the nerdy stuff, like the 30-year Treasury yields.
Oh.
What did you see? What levels are we at, and what does that communicate to you, given historic norms?
Well, so I think it's interesting. If we were to look at historic norms right now, we would look at what we call a bear steepening curve. But we've got things that are happening in the front end and the back end. So if we think of the back end, the 30-year, that's going to give us fiscal uncertainty. We don't have a lot of certainty from Kevin Warsh, and we've got fiscal uncertainty coming in with a lot of this debt issuance. Now, Kevin is more on the front end of the curve, which is the 2-year note. But what is very interesting is the 2-year note, and we've been talking about this very consistently, JD, has moved a lot more than the 30-year, has moved a lot more than the 10-year, which tells me that short-term inflation expectations are really what's on the lens and what's driving markets to me. Did a lot of analysis today where I looked at correlations of the S&P 500 versus the 2-year, the 10-year, and the 30-year just to see what was actually driving it. In the short term, it is the 30-year as of recently because of fiscal and what we've heard from Besson and moving around, and we can talk about that, but it's still the 2-year, which tells me that the inflection point that the market is waiting on actually will be PCE that we're getting on Wednesday, and Friday when we finally have Kevin Warsh talking at Jackson Hole. So I think we really need some clarity. We have uncertainty term premium, which is creating a ceiling on the S&P 500.
How lucky are we that we get NVIDIA earnings in Jackson Hole in the same week? Like, we love this stuff.
I do. What a great day. What a great day to be in the market.
We got a lot coming up in the days ahead. Let me get your take on not just what Treasury Secretary Scott Bessent said earlier today, but it's the first time you and I are talking since the so-called Bessent bond buyback, at least announcement last week. What is he going for ultimately?
Well, so I think it's interesting because we've got Treasury now not trying to peg yields, but they're giving us a signal, let's try to control them. which can be good and bad. If we look at when Yellen did this in the past, so this isn't the same. When Yellen was Treasury Secretary, she moved around issuance. So it wasn't actually buybacks, but instead of issuing so much on the back end of the curve, we issued more on the front end of the curve. Now that we're buying back and we're going to issue more on the front end of the curve, the reason why I pointed to Yellen is that it actually didn't move things as much, and I see that happening again. The 30-year yield initially retracts, but we're at the same place again. So it's very interesting. I don't think the market wanted that. It's something to pay attention to. It wants more of a clear path, not a Band-Aid. That was a bridge.
Sure.
We need someone to pave a road. And that was Mike Santoli's analogy. I don't want to take that away from anyone. But it is very interesting with the long end here that I think we need to pay attention to. So going to NVIDIA, that's happening this week. We've got NVIDIA earnings talking about CapEx. 9% of all CapEx spend was funded by debt a year ago. Now we're up to 32% of CapEx spend is funded by debt. Free cash flow going negative, which means we have a competition. We're looking for money flowing. There's a competition with AI debt and fiscal right now. That is such an interesting dynamic that we actually haven't seen. I tried to pull data to find percentage of GDP, anything to get a correlation just to understand history, and I could not find that even in the dot-com boom. So what I think is important to pay attention to is where the demand is, and that leads me to the other catalyst this week, which is NVIDIA earnings. If NVIDIA is giving us any insight to that demand equation staying there, that's going to be extremely important. But because of this push and pull with rates, it means if there's any type of shock, that is so bad for the market right now. So it's very important to pay attention to rates right now. I cannot stress that enough.
No, it's really crucial. We're about out of time. If you don't mind me asking a bit of a personal question.
Sure.
How do you celebrate NVIDIA earnings Wednesday after the close?
I mean, it depends if I put a trade or not. I love, personally, some short iron condors to look at the implied move.
Fair.
That's fun. But otherwise, you take a deep breath.
Yeah.
Simply because we're
Right
taking a lot of data.
You take a deep breath.
And then we go on to the next one, because then we've got a lot of the...
Every day's a lot.
Yeah, there's more earnings next week where we're going to look at cybersecurity, and so we're going to move on to that.
Certainly
but it's the demand equation, but it's also very important with NVIDIA, and I do want to leave you with this stat.
Yes.
They have beat consistently by $3 billion, so the market is expecting that. So we need a beat of at least $3 billion on revenue.
Okay.
If we get that, that gives us the pattern of the bar exceedingly higher. So if we get that, then I think we can go higher with NVIDIA. That supports the market, and then we need rates to follow through
we
as
get
well.
those earnings on Wednesday after the bell. Thank you for being here. Ann, grab
pleasure.
your mic, and we'll talk again soon. All right, here are a few of the top analyst calls that moved the tape this morning here on Wall Street. Howard, I'm doing my best. Pardon me, gentlemen. I'm going to squeeze by. Thank you very much. A few weeks after its highly anticipated IPO here at the New York Stock Exchange, Jersey Mike's getting an overweight rating this morning from Morgan Stanley. Those analysts call it a robust franchise business. Thank you, Peter. Shares up 11% since their IPO on July 30th. Next up, Baird downgrading Chipotle to neutral from outperform on concerns they say the company will have to spend more to grow less. Chipotle shares up 7, gentlemen, of the last 9 days. Shares about flat year to date. Finally, UBS downgrading Klarna to neutral from buy. Sarah, I hope that worked out well there to go that side. Calling shares too challenging after earnings, despite how well it is placed in the buy now, pay later market. Shares tumbling after earnings last week, now down 50% year to date. Howard, there's a lot going on down here today. How about MasterCard up 3.3% on the day, shares reaching their highest level of the year. Strong backdrop for financials overall, now retesting their all-time highs. And it's not just credit card processing in the way you and I are familiar with. MasterCard has grown into services for things like cybersecurity, fraud detection, and they really got a big boost after earnings last month. $14 billion worth of share buybacks probably doesn't hurt the stock performance either. MasterCard now up 28% off their lows of June 3rd. Well, earlier on today here at the New York Stock Exchange, FinTech TV's very own Remy Blair sat down with Jim Neeson of Connor Group. They discussed the ways the IPO market is heating up as we head into the fall. Take a look.
Joining us as we kick off the trading week is Jim Neeson, Managing Partner and Founding Executive at the Connor Group. Great to have you back. Thank you so much for joining me.
Remy, thank you so much. Wonderful to see you.
Yeah, and it's hard to believe, but here we are heading into the fall months.
Yes.
So give us your perspective on where we stand in the IPO market.
Yeah, I kind of call it that progress report. I think we're ready to sort of put it out there. So if you look at IPO volume this year, we've had 232 IPOs, about a 4% increase versus last year. I'm going to give that a C, right? It's kind of below expectations of what we thought was going to happen in the beginning of the year. If you actually look at IPO proceeds, we're over 210% versus last year, and that's taking out SpaceX. I'm going to give that an A minus. Big numbers, but it was selective in terms of where it actually went. Now, trading performance is the big one. I'm going to give that a C, and that is only 55% of the IPOs that went out this year are actually trading above their IPO price. You put it together, it's kind of a B minus. If I'm a parent, I'm sort of glad for the effort, but maybe sort of feeling a little disappointed in terms of the results.
Yeah, and Jim, I really like the way that you broke everything down, especially given the fact that it is back to school season. So
Yes.
I think this progress report is very helpful. But of course, we are looking at year end and some big mega IPOs that are coming down the pike. Of course, Anthropic as well as OpenAI. And this does
Yes.
come on the heels of SpaceX. So give us your take on expectations.
Yeah, I think expectations are feeling optimistic out there. You have some of these big deals, and they're going to be bellwethers for the AI and AI adjacent type of companies. But there's also a lot of other industries that really have companies in the on deck circle. Healthcare, biotech is the big winner this year. It is unbelievable. It's the #1 industry in terms of IPOs, and 70% of the biotech IPOs are actually trading above their IPO price. There are so many companies we have not heard of in the healthcare, biotech that are coming through. AI adjacent, defense tech and aerospace is really big. There's also a great crop of companies in financial services, B2B, B2C, energy materials that have been sort of waiting for a while, looking for the right conditions, looking for the right numbers and story. I think those are going to be not only in the back half of 26, but also that first half of 27.
Yeah, and when we're talking about expected IPOs, I think it's really important to understand valuation hype versus the reality out there. And you mentioned a lot of sectors that you're paying attention to, Jim. So tell us about those key companies that most of us may not have even heard of.
Yeah, so we mentioned some of the ones that are the expected ones. I think Shein is an interesting one that's coming out of Asia. You have an Anduril in the defense tech space. You have a Perplexity AI. You have a Spring Health in life sciences. You have a lot of companies, I think, that are sort of Canva, Cohere, Liquid Death. You look at that top 10 list, and the list can even change. But I think the idea is that a lot of companies have been private. I'll mention there are 70,000 private venture capital and VC-backed companies out there worth over 4.5 trillion. So it is an unbelievable pipeline. And then the ones that are sort of the cream of the crop that filtered to the top, those are the ones we're going to be talking about.
And you mentioned some household names there, but when we're talking about the reality of going public out there, you've been entrenched in the space for many, many years. So what are some non-negotiables and key metrics when it comes to debuts?
Yeah, you mentioned, so we've done 275 IPOs worth 4 trillion, and there are definitely some ingredients that make you attractive to the public markets. Revenue is obviously a big one, revenue growth, typically earnings, right? That you're a profitable company, a story that the street can understand, multi-generation products, not just sort of the first one, but sort of what is second and third. How are you going to use those proceeds, right? What is that working capital for? And I think a big one that we're seeing this year is that you're deploying the money to growth in the business, not necessarily to create liquidity for investors or just to sort of clear out some debt. I think there's definitely some attributes. You want a story that people can understand. And we talk about retail investors, ones that they can really embrace. It's a lot of sort of jargon and sort of business speak. Sometimes that doesn't resonate.
And as always, thank you so much for weighing in on what's happening when it comes to IPOs.
Thank you so much.
Thank you so
Pleasure.
much, Jim.
Let's do it. Welcome back to this Monday afternoon edition of Taking Stock, live from the trading floor of the New York Stock Exchange. One of my favorite all-time guests joins me now to talk all things crypto markets and beyond. The great Andy Bear, Managing Director of Asset Management at GSR. My man, welcome back as always.
Look at this smile. What could this be about?
Well, I assume this is Bitcoin re-flirting again with 80,000, been quite some time since you and I have done an interview and we've talked about these price levels. What do you make of it? What do you attribute the recent moves in Bitcoin to?
We had a super long summer where volumes were down, funding rates were down, meaning fewer people wanted to borrow to buy crypto. 75% of crypto trading is derivatives trading, so when those funding rates are low, you just very, very low energy. Prices were in a range, and then all of a sudden, many of us were out at Jackson Hole for the SALT conference, warming up the scenery for this week's Jackson Hole activities. And suddenly this news from the Treasury came in, and news that the president wanted to summon some crypto people. Wednesday morning, prices started to accelerate, and because there was just not much in there to keep prices in one place, they just kind of shot right up. We seem to like the altitude up here, held it over the weekend. We'll see where we go from here.
Does the shape of the rally tell you anything? And is it at all different from previous, maybe more comparable rallies we've seen among the crypto majors?
So far, and of course we could have a pullback, a retrenchment, back maybe halfway down to where we were before. A lot of people are calling for that. But I like this rally. I like that Ether held its own and led the rally. Even though it was a macro-led perp liquidation on that Wednesday, Ethers performed more strongly. Our Core 3 model, which fuels our BASO ETF, which just actually bumped over 10 million in assets, was stronger. It was higher weighted and stronger through this whole rally, sitting now around 2,500. So I like the fact that Ether led the rally. That means that it's an adoption-led rally, growth-led rally. Other blockchain names are strong. I also like the things that we're seeing in the marketplace. ETF inflows, perp funding rates are higher. The options market, both the offshore crypto options market and the options market here on ETFs, stronger on calls, weaker on puts, signaling people are stopping overwriting. They're reaching to buy call options for higher prices from here. Volumes are back. All these signals are in place, all but one. DeFi rates still low. So people are still not quite getting in there on Aave, Morpho, and borrowing to lever up. That would be the next thing that I would watch from here.
What did the crypto majors take away? How are they influenced by the so-called Besant bond buyback initiatives? We kind of understand what the Treasury is going for. They want to kind of decrease the pressure on the long side of the yield curve, but that kind of kicks the can up to the short end. Maybe that makes the Fed's job more difficult dealing with short-term rates, but how are the crypto majors impacted as we learned of that last week?
It's not too far away from what you're seeing in some of the traditional financial media. The thing is this going to be enough, right? With 40 trillion of debt, is the debasement trade back on? Now, of course, that's going to affect Bitcoin, or it should affect Bitcoin more than other crypto majors. But look, I think the market just needed a reason. We were sad about Clarity not passing or getting to a vote in August. We were sad about other catalysts not coming in and about the lack of activity. So we needed a catalyst to basically come out of the summer slumber. This was it. It's affected all assets, and the breadth of the rally has been good. So I think the U.S. Treasury activity was a little piece of the catalyst. We'll see where things develop from here, but I just love that we held it over the weekend.
Andy, I asked for an extra minute with you just to try and get a sense, because now is the time of the interview for my obligatory "What's the latest with the Clarity Act" question that we've been talking about for so long. We're 71 days out from the midterms. Andy Baer, what's up with the Clarity Act?
I think we have another chance in September. The SEC put out some rules which would kind of try to achieve the same things. We're all pretty sure we need legislation. So I think we're hopeful for Clarity to really get some airtime in September. But gosh, right before those midterms, the prediction markets are still giving it a pretty slim chance of coming to a vote or getting passed in 2026, around 25%. Up a little bit from last week, but still not where we really like to see it. Looks like we might have to just figure this stuff out on our own. My bet, there will be enough integration in place. There'll be enough sort of, really business operating here. You'd have to unwind businesses, not just rules, to put us back to where we were. I'm hoping the industry kind of self-regulates itself into a state of being where we get some of those, we achieve some of the goals that Clarity would have achieved. It's not a substitute for legislation, but we'll do what we can.
And we will do what we can to continue to try and learn this stuff at a fraction of the knowledge base that you have. I always learn so much when you and I talk. Thanks for being here as always.
It's always a pleasure. Thanks.
Andy Baer, don't go away. A lot more Taking Stock coming up from the New York Stock Exchange right after this. Welcome back to the show. Dimitar Karaivanov joins us now live on the trading floor of the big board. He is president and CEO of Community Finance System. Not just an amazing guest, but a guest who just rang the closing bell. Thank you for taking a few extra minutes on a busy day. Nice to see you.
Thank you, JD. Great to be here.
First and foremost, what brings you and your team down here, not just to visit us here at the big board, but to actually close the markets and ring the closing bell? What did the moment mean to you?
It means a lot. We're actually celebrating 160 years this year for the company, and that's pretty special because less than 1% of companies make it to 100 years, let alone 160 years.
Talk to us about the key priorities for Community Financial System for anyone watching who understands the industry writ large but may not be too familiar with your particular points of emphasis.
Yeah, what's really different about us is that we're truly a diversified financial services company. So we actually have 30 people in 30 states, 4 large businesses, banking, wealth management, employee benefits, insurance. And that's really what helps us cross-service clients more holistically than others, but also allows us to be very stable throughout the different economic cycles.
Talk to me a bit more about what you think a diversified model does for your clients that maybe the offerings they would get somewhere else does not quite provide them.
Exactly. So imagine yourself that you're a business, right? You need capital, so that would be the bank. Now you also need to protect yourself on the downside, so you need risk management and insurance. You also you have employees, so they need employment benefit plans, your 401k, your FSA, everything else. And then you start to make some money, you're creating some wealth, and you need some asset protection and asset planning and growth for the future. So you can get all of that in one place with us, and we cross-service you in the most seamless way possible.
Let's take a step back. Let's look at the industry over the next decade or so. What do you think will most separate the winners from the losers in the world of banking over the next 10 years?
I think it's going to be, as always, it's focus on your customers, focus on your colleagues, focus on your communities, and change management, because we are evolving very quickly, so change management is really, really important.
I wouldn't be doing my job as a broadcast journalist in 2026 without asking you something about artificial intelligence. Where do you see the biggest opportunities for your business in AI? And where is the human element still more important than maybe any other piece of the equation?
Absolutely. So the biggest element that we're working on as it relates to AI is removing the friction. So if you think about what we do, it's enabling people, but it's also friction. Like, you want a house, you don't want a mortgage, right? So our mortgage process is a friction. So we need to make that seamless for you, but the person is on the front end. The person is where the trust is. We're in the business of trust and integrity. So the human's going to have an even larger role on the front end, and AI is going to help us on the back end.
What comes next for your work at Community Finance System? Some of the top priorities you're working on that most excites you in the short term coming up?
I'm really excited about our talent level, our ability to compete with anyone on anything, anywhere, and our ability to service customers in a more holistic way.
Dimitar Karaivanov is the president and CEO of Community Finance System. Just rang the closing bell here at the New York Stock Exchange, and I'm very lucky he joined us here on the show. Great to see you. Congratulations.
Thank you, JD.
We'll talk again soon. Folks, don't go away. A whole lot more taking stock coming up from the big board right after this. Welcome back to the show. Time now for a few headlines in the world of fintech. What is it? Fintech, crypto, and AI. We've only been doing the show for a year. I'm still learning it. All right, at this hour, the crypto majors all in positive territory. Solana, the outperformer, up 5%. Bitcoin trying its best to reclaim 80,000. Next up, the Coinbase-backed advocacy group Stand With Crypto endorsing 32 different House candidates it views as pro-crypto. It comes as the industry looks to flex its growing political influence ahead of the November midterms. Finally, Michael Saylor's strategy setting up more than a $1.5 billion cash pool that can be used to buy more Bitcoin, pay dividends and debt, or repurchase securities. And now Scarlett Sieber is back with a whole new edition of Hindsight 2020, where she breaks down important dates in financial history. Take a look.
I'm Scarlett Sieber with Money 2020, and this is Hindsight 2020. Let's rewind the clock back to August 24th, 2001, right after the dot-com era. Microsoft releases Windows XP to manufacturing, which sounds like a story about software. And technically, you're right, it is, but it's also a story about infrastructure, because over the years, Windows XP would quietly become one of the most important operating systems ever created in the history of operating systems. Banks used it, businesses used it, governments used it, ATMs used it, point of sale system used it, entire industries ran on it. And that's where the real lesson begins. Technology doesn't become powerful when people talk about it, it becomes powerful when people depend on it. Windows XP spread across the economy, it became embedded in critical systems everywhere. Millions of decisions, millions of transactions, millions of daily activities, all powered by software most people barely even thought about. Let's fast forward to today. We talk constantly about AI, cloud infrastructure, and digital transformation, but the lesson, it still remains the same. The most important technologies are often the ones nobody notices really, until they're unavailable. August 24th, 2001 wasn't just the launch of an operating system, it was the beginning of a platform that would quietly underpin large parts of the global economy. That is your Hindsight 2020, because the most influential technology is often the technology hiding in plain sight. With that, back over to you.
Rock and roll, folks. Welcome back to the broadcast. Tomorrow here on Wall Street, first thing in the morning, we will get the latest quarterly results from Dick's Sporting Goods and BMO, the Bank of Montreal. We love BMO. This time tomorrow, the latest results from the teams at Intuit. On Wall Street today, Staples, Financials, Utilities, the outperformers in the S&P. In the Dow, Visa, Walmart, and Disney, the House of Mouse. That's right, the big winners. The Mag 7 mixed, Meta, the outperformer on that particular bunch. Retail and the major airlines catching a bid here on Wall Street today as well. That'll do it for this edition of Taking Stock. Thanks for watching. We'll see you again tomorrow.